Welcome to Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. And for this edition, we're going to focus on market structure, particularly in the area of order routing. And helping me do this live is Linda Giordana and Jeff Alexander. They're the co-founders of Babelfish Analytics. I like that name. Definitely interesting. But before we get into order routing, what that is, why it's such a big topic in market structure, what does Babelfish Analytics do, and what kind of customers do you have?
Babelfish is a transaction cost analysis firm. We focus on analyzing orders and trades, but we really focus specifically on the routes. The routes being the part of the trade where it immediately goes out to the market. You know, those 100 shares, the tiny pieces where we start interacting with venues, sequencing, that part of the market where it really becomes very important to understand how the orders are getting to other counterparties. We've been focusing on that for about 5 years. Jeff and I have been working together. Seems like forever. Don't make a joke there. But we found that part of the routing, the trading sequence, really has a lot of impact on performance, and this is where our clients led us to focus. Our clients are asset managers, plan sponsors, but we also work with brokers when directed. We work with exchanges. We work with technology firms. Anybody involved in the execution process with the goal of improving performance for buy-side clients.
So it's just like anywhere else in finance, it's more of a fintech project than just specific to the trade itself. But Jeff, if you could go into more exactly what is order routing, and I know, Linda, you touched on that a bit, but why is it so important to the market structure conversation right now?
Sure. So let's talk about, there's this image from the movies where somebody wants to buy 1 million shares of stock, and let's say you're a portfolio manager, you're operating on behalf of a pension fund. I want to buy 1 million shares of stock. I pick up the phone, my broker picks up, I'm done. That's not the way the world works.
Right.
I mean, if you call up and you tell somebody you have 1 million shares that you want to purchase, all you're going to do is make it more difficult for yourself. So what happens is you try to slice that into many little pieces to evade detection. So that 1 million shares may go out in 10,000 or 20,000 different pieces. Now, of those 10 or 20,000 different pieces, if you're doing what's known as a liquidity seeking algorithm, where you're going out and you're trying to purchase stock, 80 or 90% of them will come back entirely empty. Now, if you're looking at traditional transaction cost analysis, they're not going to look at those at all. Now, on the ones that you do get a fill back, your overall fill rate, the number of shares that you get compared to the number of shares you try to get, will be around 1%. If you're not looking at the routes, you're losing 99% of the information that you have to do the analysis. If, when you're parceling out that order, if you're parceling out 10,000, 20,000 times and you're doing it in a sloppy and predictable manner, all that's going to happen is someone on the other side is going to figure out what you're doing, and they're going to be able to profit from you in a big way.
Right.
What we do is we look at all of those 20,000 routes, all of those fills and all those unfilled, and we look and see if we look at the same thing that those counterparties would look at on the other side. We look at it as if we were somebody trying to profit from the buy-side orders and say, are your orders being routed in a way that is predictable, that someone can pick you off, and are you being picked off? Is there a cost to the fund that's coming out of your pension funds, that's coming out of your individual investors?
Well, Linda, let's dive into this deeper and build on what Jeff said. What's the difference between venue and routing analytics? Those are two different things. And traditional transaction cost analytics, how does that help asset managers?
If you think about the whole trade cycle, it starts from the portfolio manager. The portfolio manager is sending their order to the trading desk. Trading desk is sending to a broker, usually using an algo, but it could also be via using a high touch desk. The difference is traditional TCA will try to suss out where the impact is, but typically it focuses on reducing the impact from, let's say, the portfolio manager to the trading desk, because typically there's a lot of performance loss there. That process could take a very long time and may never materialize. What we're focusing on is really looking at the tools that are in the trader's hands, looking at the algos that the trader is interacting with, helping the trader understand where those performance losses are coming from, how the orders are being sequenced into the marketplace. Every one of those little routes, where the impact is coming from, and trying to optimize that process while with traditional TCA, it's extremely important. Everyone needs to do it. It could be a very long-term process to try to eke out those additional basis points, which will roll up to improve performance. Knowing the trading tools inside and out and understanding how those trading tools work and working with brokers to make those trading tools better, there's also performance there. And that's something that I hate to say it, even after 5 years, it's still a very new field. There are many firms that aren't doing it. There are firms that are doing it that still need to do more of it. This is something that's critically important because there's a lot of performance being left on the table. Right. So that's where the buy side has to shift its focus because it's part of the TCA process. Focusing on the PM process is truly important, but really getting down into the nitty-gritty with the algos and understanding how they work and understanding how to optimize them, it's something that everybody should be doing because there's a lot of performance being left on the table.
Because it doesn't sound like much. A basis point here or there doesn't sound like much, but when you add that up on millions and millions of shares, it could really impact your P&L.
Well, I think about it, and I have this analogy, like you go on a diet, and if you only eliminate, eating steak instead of eliminating, let's say, jelly beans because they're small, you're still going to gain weight. This is the same thing. It's like if you're only focusing on the big things instead of focusing on the little things, you're still going to have performance impact. It's a lot. All these little 100 shares. One of the things as a traditional TCA person, we were always taught that these 100 shares weren't going to have impact. One of the first things we looked at when we were, way back when, 5 years ago, we noticed that 100 shares was having impact. And as you said, these 100 shares over and over and over again, these little pieces add up and it gets baked into the benchmarks you're looking at, which makes it even more problematic to identify. You have to start looking at the efficiency. You have to start looking at how things are being sequenced to the market. You have to look at, is the first route going to a broker's own pool and sitting there for 2 seconds? Is it valuable? Are you getting something out of it? Is there an opportunity cost? Stuff like that is important to know.
And this is what Babelfish helps its clients do.
We're looking at the foundation of the strategy.
Right.
Just like when you look at a house, you have to look at the foundation. The foundation of a broker strategy is how they route and where they route. If you don't look at the foundation, what you're going to do is you're going to buy a house that's going to sink into the ground. Mm-hmm. What we do is we look at the foundation and we tell them, is the foundation solid or is there a problem with the foundation? What do you have to do to fix that foundation if you want to buy that house?
All right. Well, thank you very much for joining us at MarketSite. And traders, as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.